more perspective into our show. Suresh Ganapathy, the banking analyst at Macquarie Capital Securities, joins us now to talk about some of the stocks that he closely tracks. Suresh, hi, thanks for joining in. How did you read the ICICI Bank 6% stake sale in their life insurance business? And going ahead, how would you approach that stock?
Well, they have indeed got a good valuation for their business, close at about 32,000 crores. Of course, the earlier ESOP valuation was about 38,000, but then if you look at it, the price to embedded value multiple comes out to be about 2.2, 2.3 times, which is fairly in line with what other transactions have happened. If you go by, for example, the recent HDFC transaction. So in that sense, I think they have got a really fair market price multiple for the transaction.
Okay, so Suresh, the second part of the question that Sonia asked, what's your call on ICICI Bank as a whole post the stake sale and after the last quarter numbers?
Clearly there has been a good valuation support at this point in time. The stock trades at about 1.5 times FY17 price to book. There could be some near-term concerns in asset quality due to which the stock could remain range-bound between 280 to 300 bucks. But then over the longer term, if one were to take 2 to 3 year perspective, ICICI still remains one of the better plays in the banking sector, considering that it is very well capitalized and also it has got a very good deposit franchise.
What about the asset quality? We did hear from SBI that perhaps the worst is over as far as asset quality woes are concerned. Do you think for ICICI Bank the asset quality has bottomed out now?
Not necessarily for this sector, Ekta. I mean, it will take quite a bit amount of time, in my opinion, maybe another 12 to 18 months before we start seeing some incremental signs of asset quality improving. The problem is some of the large corporate groups which are there in India at this point in time, they are not even shown as NPLs in the books of banks. So it will actually take quite amount of time before we can say with conviction that asset quality has actually bottomed out.
Okay, Suresh, stay on with us.
Axis Bank. The street was disappointed with its asset quality performance this quarter, but how would you be placed on the stock now?
Well, we do again have a buy on the stock. Axis story is also somewhat similar to ICICI. Again, near term the stock could be pretty much range bound because of the asset quality concerns, and as we have been telling that for the next 12 months it doesn't look that great from an asset quality situation for the overall market. So again, one has to take a longer term time frame. Axis is also well capitalized. It has also got a good management and a decent deposit franchise. So these would be a better long term picks to play the macroeconomic recovery. But near term, obviously, as I said, there could be some level of underperformance.
Okay. In terms of earnings season as a whole, how did you read the PSU bank's asset quality? Many of them indicated some flat performance, at least on the P&L this quarter. But on asset quality, what's your call?
So, I mean, it still looks pretty bad. I mean, some of the PSUs have started reporting losses. A lot of people are evergreening the loans by doing a lot of I-25 refinancing. So, PSU banks certainly are not completely out of the woods. I think we can say with a fair amount of conviction that there is no point in owning them even from a 12 to 18 month perspective because there is too much skeletons hidden on the cupboard which will eventually come out in due course of time.
Okay, are some PSU banks out of the woods though, say the bigger ones?
SBI is slightly better compared to others considering that they never restructured quite a bit amount of loans. So to that extent, the problems that many PSU banks are facing with the slippages from restructured assets, that may not be necessarily a big issue for SBI. And we can also see that in the numbers that SBI has been reporting slightly better asset quality compared to others. But then apart from SBI, it is very difficult to single out any of the other PSU banks with conviction that they are out of the woods.
Okay, stay on with us, Suresh. For the market, it's now inching back towards high point of the day. So that's good news for the bulls. And the stock that's responsible for that is actually two stocks, Infosys and HDFC. Pull out both these stocks. Infosys is making a move back towards 1050. 1050 was the support which a lot of people were surprised that Infosys broke effortlessly, but now the stock is almost back there. And HDFC is the other stock where we have seen some gains. So that stock. Let's take one more question from him. Suresh, we had the news on Indiabulls Housing Finance, which the market didn't like, about them picking up stake in the UK bank. How did you read it, and what's your call on the stock?
Well, of course, it does raise some issues about how come, in a way in which the money is actually trying to be deployed, because the management had not indicated something like that happening, that they would be looking at some deposit franchise in UK. So the stock is more or less factored. A 10% correction is more or less factored the downside or the negative perception of the investors on the stock. So over the longer term, I think it still remains a decent bet on the housing story, and I think a 10% correction is a good opportunity to enter into the stock.
All right, Suresh, we'll let you